Hello and welcome to firststepsinforex.com. Today is Sunday the 20th of March 2011 and we're looking at the pound dollar daily chart. Now, over the last few weeks we had seen a very long upward movement for the pound dollar. We reached a top at around the 1.64 mark. That was back in the first week of February. We've descended until recently. We had almost like a quadruple bottom there over a period of a few days, and now we're shot back up again. So the last time we spoke, Monday, Tuesday, Wednesday, Thursday, Friday, I was here. We had seen that on the previous Friday, we'd seen a very strong reversal signal. It's like a pin bar or a hammer in Japanese candlestick parlance, and true to that, we had a very nice long on the day after. I went long above the high. We went up, and we hit this, came down again, and I was still in long. And the following day, we started going short again, and I got stopped out after about 50 pips. But I made about 70-80 pips on the Monday. Wasn't quite sure what to do, watching it follow down, but as soon as we went below this support and resistance, I went short. Of course, we went all the way down here. Following day, I got stopped out as we went back up again. But I'd made another, I can't remember, 60-70 pips there. Was a little hesitant because I wanted to wait to see if it went above or whatever. It just seemed to be bouncing around on that one. Then on Thursday, I didn't go long until right towards the end of the day when we went above the high of this. Then I kept it up high and I took advantage of it. I got stopped out a little bit on Friday, but then went back in again after we went above there, and then I closed just before the market closed. So in all I made about 250, 300 pips I think for the week, which is not bad. I'm not complaining. A profit is a profit, and it's a pretty good one. So we've now hit a 94.1% retracement from there, which is not so relevant. Let's just clean up this chart a bit. I'll take those Fibonacci lines out because we don't really need them anymore. Let's draw from this high to this low, see where we are. We just hit the 78.6% retracement. We closed at the 16232, which isn't really that significant. Not far from the 16200, which is close to the 61.8%. That is significant, that area, with the support and resistance area, the 61.8% retracement, and of course the slight sort of round number. It's been very bullish on the last few days. I'd expect it to continue going up, but we won't know until the market opens. Target area will be back up here, where we were before, where we had a support and resistance pivot area here. My instinct thinks it would carry on going up, but we've got to be careful. I won't go long unless we break the high of the previous Friday, and I won't go short unless we break below the support and resistance area here, around near the 61.8%. So let's go to the weekly chart, see what's happening on the big picture. Obviously we had big move down over there, big move back up starting mid-summer. Well, actually no, August, summer of 2009. Went down to the mid 2010, bounced back up again. It's probably worth, let's just check the support and resist the Fibonacci returns from that one to there. Now that's interesting. We have a double Fibonacci return, which is what we like to see. So we have, let's just change, maybe we can change the color. I just want to make it a bit easier. Fib properties, blue, let's change it to something like green. So we have a 38.2% there, and also what looks like the 78.6 here as well. And when you have a situation where you have one Fibonacci retracement overlapping another one, so we had this one here to here, and then we had all the way from over here, it means it's a powerful signal. It's a conjunction of Fibonacci. So let's just zoom in a bit. So that's an interesting, so on a weekly, that's an interesting target area for the future. Okay, so we broke through, although we closed still within it. This was the original target area from before. We did break through, but we pulled back a little bit. We're on a very strict upward weekly trend line, so I would suggest we seem to have broken through this long-term trend line going down, so it does suggest to me that we're going to carry on going up, but I'm not going to get back in again until the markets are open in Europe and UK plus half an hour at least. And if we go higher in this, then it's worth getting in. If we go higher and higher Friday or below that support resistance area, then I'll go short. Okay, so once again, please put your stop losses in, protect what you have. Forex trading is more about protecting what you have than it is about making more money. Okay, so always use the 2% maximum exposure to your trading pot for any one trade. Okay, and we'll see what happens on Monday. That's about it for this one. If you're interested in finding out more about how I trade, please go to my website www.firststepsintoforex.com, and there you can register and get a free ebook and videos to get you started. It's mainly for beginners and intermediate traders, but I'm welcome for any comments for experienced traders as well, and it's all completely free. Okay, thanks very much for watching, and I hope to update in a few days' time. Thank you. Goodbye.